Hi guys, in this video I'm going to show you 3 trading strategies that I use in combination to make consistent, profitable trades. Let's get straight into it. Hi guys, it's Any, aka the NUG Trader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the NUG Trader on all social media platforms. And if you check that description section below, you see a link to my mailing list where you get priority access to my now training course that's actually available now. So check that out. And you also get weekly emails directly into your inbox, all my latest videos. I've also got a chat room, free chat room called Pip Talk that I run with infinite investors, where it's got like-minded traders and investors just talking about everything and anything to do with the stock markets. Now in this video, I'm going to be showing you 3 trading strategies that I use in combination to really get a real good idea of a trade that I want to enter. So these are 3 different strategies, and when you use them together, it really just gives you more confidence in a position that you want to take. So I'm going to use this example on JNUG, which is a ETF, a gold mining ETF. I'm going to show you how I use these 3 different trading strategies. Now, when you use multiple trading strategies in combination, it's called Confluence. I put on the screen the definition here. And that's exactly what I'm going to be doing today. So let me just show you right now. Let's get straight into it. Now, right now we have a chart, a 4-hour chart of JNUG. And right now it just looks like it's kind of going up and down, up and down. But I want to kind of, I think it can potentially be a continue selling off, but I don't want to assume. So I'm going to use some technical analysis. And first I'm going to start with some chart pattern analysis. So what that means is I'm just going to draw lines and see where that takes us. So here, already here, we can see these. There's a kind of a resistance line here that's been hit a couple times. So I'll draw that here. And then we've got potentially a and then we got a support line here. So right now, off the jump, right now what I'm seeing is a wedge formation. Now what this tells me is that because it broke out from the downside and it broke into the wedge formation, it was a bullish move that entered into the wedge formation. Then it kind of ebbed and flowed to support and resistance. I believe this area here, I'll draw a little box here, would have been a great place to short, because from here it's showing you each time that it sells off quite rapidly and it starts selling off here. And I believe this place would have been a great place to kind of take your profit. But this is just off of one way of looking at the chart, which is a chart analysis, and I can see a wedge formation. Let me show you the second way that I would look at this chart to kind of see how I potentially could have traded it. Okay, so I've deleted the wedge formation, but we're going to return back to that in a minute. Now I'm going to use Fibonacci. So Fibonacci extensions, I would this one, Fibonacci is kind of an interesting one because you kind of have to just play it by eye and just see how you can potentially there's no givens in Fibonacci because you can just plot lots of lines and still get nothing. So I've done Fibonacci from there to there, potentially nothing else. Got Fibonacci extension. So I'm using extension because the price is selling off, so it can, so I'll use an extension for when price is selling off, and I'll use a expansion for when price is selling off, and I would use a retracement for when price is going up. So if I was gonna look from here to here, then I'd use expansion. I'd use retracement. Sorry, I keep going. And if I'm going down, then I'd use expansion. So from here to here, let me try expansion here. So here, straight away, you can see that there's relevance in this Fibonacci levels, because I posted from this peak to this trough here, and as you can see here, it retraced all the way back to the 50% level and then started selling off. So that means, again, this point, based off of Fibonacci levels, would have been a great point to potentially short, just based off of the information that we're given here. Now, obviously, when it gets to the 50% level, we can assume that it could sell off, but it could break out. So what kind of confidence would I have had that level might have been important? Well, if we look at previous kind of highs and lows as well. No, it's not there. Something like that. So the 50% was kind of respected here as well. So as we can see, we can kind of see there's a little bit of a pattern forming. So this once again, this level here, based off of Fibonacci, shows a potential short position could have been taken once it hit the 50% level. And then finally, another thing that I saw on this chart, this is kind of a bit more of an advanced way of looking at technical analysis, was, let me just draw this support line again that I drew before. So this support line obviously has been respected here. It's been respected 3 times, so it's of relevance. Now, straight away, just based off of experience of technical analysis, I saw straight away that there was potential that there could be other parallel lines parallel to this. So I kind of did that, and this line didn't really make sense, but I saw that there could potentially be another line that could have been plotted here. So what I did was that I'd go from here to here, and then I'd look for potential other lines. So this line here, it's not an exact science. Obviously you can plot your own, come to your conclusions, but here I can see that there was kind of some sort of relevance here with this line. So I would normally make this line dotted because it's not as important now as it was before, but it still has some sort of relevance. So straight away from that line, you can see that every time, several times when it was hit, it was treated as either resistance or support. Well, it was actually just treated as resistance. So it's not far-fetched to think that when the price came up to this line again, because it's done it once, it's done it twice, it's done it thrice, and again you'd think, okay, potentially this could be a position where you could short based off of the fact that this dotted line has been treated as a resistance a couple of times before. So I've just shown you 3 different ways that you could use Confluence, using Fibonacci, using chart pattern, and just using advanced technical analysis through just line drawing. And when you bring them all together, you get something like this. So as you can see here, this is a combination of all of the different technical analysis strategies that I just spoke about earlier, all on one chart. Now it looks quite overwhelming if you look at it all in together, but if you see here, all of these different types of chart analysis has led me to the same conclusion that at this point, it would have been a great position to short, but based off of the wedge formation, the Fibonacci expansion, the parallel line that was a resistance line 3-4 times before, has all said, okay, this looks like price is going to sell off, and lo and behold, it started selling off. Now, based off of the information I've been given here, a good take profit zone would have been around here, this green area, just based off of the wedge formation and the support line created by the wedge formation. I wouldn't be surprised if price went all the way back down to this green zone here and then maybe bounced off of back to the resistance line. But yeah, this video was just really to kind of give you a more in-depth breakdown in how to take advantage of Confluence and using different trading strategies that you've come across along the way and converging them into one strategy that can really give you confidence in a position that you're taking. So there, yeah, that's me, Any, aka the Knock Trader, signing out.